We've benefited from that. The Oil and Gas Fund, our Gold Fund, and our Global Value Fund have all delivered really strong results by tapping into those broader waters. Hello again, everyone. In this episode, Nick sent in a really insightful question. He asks, is it possible to find value outside of small caps? Now, as a long-term investor with us, Nick's observation is spot on. Most, but not all of our recent ideas have leaned towards the mid and small cap space. So let's address this head on, starting with a quick primer on what market caps actually are, because I think most people don't actually realize just how shallow the Australian market truly is. Now, in Australia, large caps are commonly defined as companies with market capitalizations over 10 billion. Now, this group extends to giants like Commonwealth Bank with a market cap over 250 billion. But really, when push comes to shove, only about 50 companies qualify as large caps. That's a tiny 2% of the total market. Mid caps, they bridge the gap between 2 billion and 10 billion, and there are roughly 100 stocks in that category. While small caps typically range from $250 million to $2 billion and number about another 150 companies. That's 300 companies making up the large, mid, and small cap indexes in Australia. The remainder, which is almost 2,000 stocks, are what we would call microcaps. Now, interestingly, the top 300, which is less than 15% of the market, probably attracts over 95% of the market's attention and analyst coverage, and the top 50, which is about 2% of the market, probably grabs over 75% of all of investor scrutiny. And it's that context that leads us straight to the heart of Nick's question. Why have we been investing outside of the top 50? The answer's easy. That's where the real opportunities have been. Now, value can exist at any market cap size, but true value investing hinges on spotting mispricings, and mispricings are far more likely where fewer eyes are watching. Now, as value investors, our edge comes from deep research that uncovers an information advantage, basically identifying overlooked gems before the crowd notices them. And we stand the best chance of finding that outside of the heavily covered large caps, where analysis and competition is much more fierce. Imagine trying to unearth a unique and material insight into Commonwealth Bank. It's nearly impossible when thousands of other experts are scouring the very same information as we are. By contrast, take companies like Select Harvest and Emeco Holdings, both companies worth about $700 million, both companies sitting in the value fund. There, competition was minimal, making it far easier to build a genuine edge through our thorough analysis. We're not deliberately hunting small caps. We're hunting mispricings wherever they may be. It just so happens that we find more of them beyond the 50, which might create the perception of a correlation between small caps and value opportunities. But correlation isn't causation, and value isn't confined to size. That being said, even when looking at smaller companies, it's not without trade-offs, especially when it comes to liquidity constraints. I think obviously spotting an opportunity, spotting value is step number one, but you also need to be able to build and exit your position without drama. So for instance, for a $5,000 trade, almost any ASX stock would transact smoothly. But if you scale it to 50,000 or 500,000 or 5 million, you have to suddenly ask yourself, how much will my buying push the price up when I'm trying to get in? And how far might it fall when I'm trying to get out? Because in microcaps in particular, even as small as a $50,000 investment can move markets by 10% or more, turning execution into something of a high-stakes puzzle, which means smaller stocks demand confidence, not just in the idea, but also in your execution. Now, interestingly, our research often pulls us towards international markets, where liquidity pools seem to run much deeper. I think that Australian super fund giants pour into the ASX top 50 and so drive prices higher, but overseas, institutional value hunting seems far less constrained. We've benefited from that. Our special access satellite funds like the Oil and Gas Fund, our Gold Fund, and our Global Value Fund have all delivered really strong results by tapping into those broader waters, because small to mid caps internationally offer almost unlimited research and investment opportunities. So here are my two takeaways. Number one, mispricings exist everywhere in large, mid, and small caps. But for the moment at least, they're certainly rarer in the more crowded large cap pools. And number two, when venturing into smaller stocks, you've always got to balance the potential rewards against the costs, including liquidity constraints, because sometimes the cost is too steep, no matter the apparent value on paper. So Nick, to answer your question directly, yes, value exists across small, mid, and large caps, but only sometimes, and only if you roll up your sleeves to uncover the mispricings. As always, if you want to talk about this more, I'm just a phone call away. And to everybody else, thank you for staying with us. I genuinely hope that this added some real value to your investing journey. Bye for now.